Hello and welcome to BloombergQuint. Hi, this is Nikki. Tata Power has cut in a deal for a renewable power business with BlackRock, which almost is at 50% premium as compared to the industry standards that we've been witnessing over the last 6 months. But the key question now remains that how does the company scale up in the face of strong competition coming in from Adani, RIL, and also the state-owned NTPC on the other side? With this, let's bring in our guest, the CEO and the Managing Director of the company, Dr. Praveer Sinha. Hello and welcome to BloombergQuint, sir. I'm going to start off by asking you about the vision that you have in terms of the scalability of the renewable power business. By 2027, you expect to have a capacity which is more than around 20 gigawatt as compared to 5 gigawatts right now. What sort of capital is required for such expansion going forward?
Good morning, Nikki, and thank you for having me on the show. As you rightly mentioned, this is got a premium much more than any other deal which has happened in the market in the last 6 months to 1 year. This is a unique platform that has been created, and it is unlike many others where they used to be only for utility scale. We have brought a whole gamut of services, right from manufacturing of cell modules to EPC, to rooftop solar, to solar pumps, and also the EV charging. So to that extent, one has to look at it more holistically and in totality, that this is going to grow much faster in all the areas that has been mentioned. You mentioned about competition, and I would like to mention to you that, again, because of the whole gamut of services that we provide, we produce our own cells and modules. The quality of cells and modules are very good, unlike many others who procure it from China or procure it from some other places. And we do not know how good they are in terms of quality and also in terms of pricing. Secondly, we do our own EPC. So we sow our own seed and then see the results of that. So that again gives us a huge advantage in terms of optimizing our cost, but also ensuring that the quality is good and these plants last for 25, 30 years. Thirdly, we do our own O&M, and we have a huge bench strength of people who run these plants very efficiently. There was some time back, about a year back, a study done on benchmarking of performance of plants, both for solar and wind, and we were, of course, number one in that. We will benchmark in both solar and wind plants. Again, many of the technologies that we use a large number of artificial intelligence solutions. We use data analytics to improve the performance. So we are definitely much better poised for running these businesses, setting up these businesses, and operating these businesses. All those value comes in this platform, and our partners will benefit from the experience that we have. And we are very confident that what numbers that we have given will not only achieve those numbers, will surpass those numbers going forward.
Sure. I'm not doubting your capabilities on that count. I'm just wanting to ask, what kind of capital do you think you would require going forward to scale that up? And how much of that will be met internally? How much of the debt will be raised for this kind of activity? Any ballpark estimates on that?
So the investment that is coming in is good enough for us for next 12 to 18 months.
Sure.
We have the plans for utility scale, group captive, as well as the manufacturing facility that we are putting up for 4 gigawatt. The company, because of its growth, will also generate huge amount of cash. The EBITDA for utility scale is very high. It's in the range of 85 to 90%. And we will be generating huge amount of cash in that business, which will make it self-sustainable going forward. The debt, of course, will come from the market, and we again are very prudent on the debt-equity ratio. So our equity typically will be in the range of 25 to 30%, and balance will be debt. We'll have a very healthy debt-equity ratio, healthy DSCR, and we will ensure that the business is managed in such a way that it is never short of cash and it has adequate money for the growth that is planned.
Mr. Sinha, more of numbers, please. I'm not talking from the
Yes,
near-term perspective. I'm talking more in terms of the 5-year perspective, because that's what the game plan is, right? You expect to scale up from 5 gigawatts to around more than 27 gigawatts in the next 5 years. So what sort of capital do you think the company would require to bring that expansion around? And also with this, what kind of debt to EBITDA would you target by the end of 5 years, if not for near term?
so let me tell you that the investment for 15 gigawatt of capacity, right now we are at 5. We have nearly 3.4, which is already implemented, and there's another 1.2, which is under implementation. So when we look at that, you have to add 15 gigawatt. Typically, 1 gigawatt costs about 4.5 crores, depending upon what is the cost of cell and modules, and also the cost of steel. So you can consider that it will require at least another 60,000 crores in next 5 years' time for the utility scale only. And then we have, of course, the group captive and some of the other investments that will come along with this. So there is a huge amount of capital. We will, as I mentioned to you, we'll have a debt equity ratio of 75:25. And we typically will ensure that our debt equity ratios are less than the market norms of 2:1. So that's the way that we are looking at that, how we can grow the business and also be careful in terms of the amount of debt we have, so that the internal accruals are good enough to not only repay the debt, but also repay the interest cost which is there.
Mr. Sinha, if I've got that right, you said you would need 60,000 crore to build up that capacity. Have I got the number right?
Yeah, 60,000 crore of investment will be required.
And how much of that will be met internally?
So, excepting for the debt, everything will come internally. So once we
how much do you think would be the debt component in that 60,000 crore?
So if we consider that 75% will be debt, so you can do the maths that 45,000 crores will come out of debt and 15 will come out of equity.
So what would be a debt to EBITDA ratio by the end of the 5 years? What is it currently standing at, and how do you expect to turn out? What kind of leverage would we be looking at by the end of this expansion?
We'll be looking at 1.5 to 1.6.
That is 2025 estimates that we're looking at, that you're looking at this debt to EBITDA ratio?
I'm just getting into the ballpark numbers, as I mentioned.
Sure. So this is after the expansion that you're expecting that kind of debt to EBITDA, right?
On a very, very ballpark numbers, that sort of numbers, yeah.
Sure. Okay, I would also want to, because there's a range of brokerages coming in, and they're kind of saying that, the valuation is actually less than what the expectations were. The deal did not impress them, even if it's at 50% premium as compared to industry standards. The stock saw some amount of downgrade coming in from even the foreign brokerages, for that matter. I would just want to understand if you could provide us with a ballpark estimate of the EBITDA numbers coming in from each of the division, because only then would the valuations be justified, and what analysts are penciling in. If you could provide us with a ballpark estimate of your renewable power set, EPC, solar rooftop, any ballpark number that you could give for these businesses segmentally would be of great help.
We don't give any ballpark numbers. We don't give any estimates for future. So whatever we have shared are the numbers that is available.
Yeah, Mr. Sinha, the reason why I'm asking you this is, although you've categorically said that the deal has been the best that you've seen in the last 6 months, almost at 50% premium, but the fact still remains that most of the analyst community were penciling in a higher number, which means that they are now seeing lesser amount of operational performance coming in from those divisions. So if you could just throw some light on the kind of EBITDA that we could expect from each of these divisions, or maybe a ballpark understanding would be great.
See, Nikki, we have to look at it that what the present business is and what is going to happen in next 1 year. And the numbers that has been given are based on the FY23 numbers. So it's not that we are giving a number for 24 or 25 or 26. And the numbers that we have given are very aggressive numbers, are very good numbers, and are doable numbers. And we need to just restrict ourselves to that. What we are expecting is that we have set a very good foundation and very good fundamentals for growth, and that will what will happen. We have to take it in terms of our performance that we will deliver quarter on quarter going forward. And I'm sure the analysts and others will realize that what we have given are something which is very attractive. And I'm sure this is something that they keep on revising from time to time, and they will do it as we move forward.
Also, Mr. Sinha, I was just looking at the basic math of how we could look into, the deal. I saw 19 billion coming in from the renewable power business in the first 9 months of this financial year. Is it safe to assume that we'd be looking at a number which is northward of 25 billion by the next financial year?
See, you need to consider in the first 9 months, we had more than 3 months of COVID impact. We had in April, May, the second wave of COVID, which was a very severe COVID that we had. We had the third wave of COVID during the month of December, January. So we need to consider that basically that 9 months was actually 6 months of performance that we have delivered. And this year, full year is actually 9-month performance that we have. So once we get a full platform of 1 full year's working, the performance will definitely be much, much better than what we have. And we have seen that this once the quarter results come, you will yourself see that our performance has been very good in the last quarter, primarily because, again, notwithstanding the fact that January was impacted by the February, March results are going to be very good. So I would only suggest that we need to look at it from a long-term perspective rather than just looking at it from a very short-term perspective.
Because that's precisely why I was asking the EBITDA numbers for maybe the next 2 years, 3 years, if not for the immediate term, because we wanted to understand the size and the magnitude of the deal so that we could put a fair valuation to those numbers. And hence I asked you the question, if you think we could do more than 30, 35, a northward figure to that. I have revised my estimates as we speak, because you said the 9-month performance actually looks like a 6-month performance, given the kind of issues that we're witnessing right now. Even if I, analyze the whole number based on what you've been speaking, you think a 30, 35 billion number is doable by the next year?
So you'll have to wait for some time, and the results will speak for themselves.
Okay, Mr. Sinha, I gave it a hard shot there, but yeah. I would also want to ask you about, the coal index in Indonesia, which is up by almost 40% month on month in April. I wanted to understand, how do you view this going forward? Because there is a situation even in home, back home, where there is a domestic power situation, elevated gas prices. There is going to be a growing amount of dependence coming in on coal to meet the power demand. How do you view this, situation right now? What kind of realizations are you expecting? Any ballpark estimate or your understanding on that?
So the coal prices have gone up, and coal prices, like all other energy prices, whether it is oil or gas, is dependent on the international price levels. We have seen the coal prices actually in the month of February, March, touching an index of nearly $350 to $400. It has, in the month of April, come down to about 280 to 70 numbers. And we do expect that at least in the next 2 quarters, it will come down to sub 200 level. So, but it is still very high. It is still very high than what it used to be in 2019-20. And we expect that it will take possibly another 3 to 4 quarters for it to come down to a level of maybe 140, 150. So it's going to be a little high, at least in next 1 year time. But going forward with the type of pressure globally is there on coal, it should come down to sub 100 level in next 2 years time.
Okay, I wanted to understand, what is the profitability of interim PPA agreement by Mundra? because we've been supplying power to beleaguered states like Punjab, Haryana, and also Maharashtra to an extent. What is the profitability right now from these interim PPAs?
So right now the arrangement is with Gujarat and Maharashtra. We are running 3 units. So we are supplying about 1500 megawatt to Gujarat and 600 to Maharashtra. The coal cost is a pass-through, and the other aspects in terms of the sharing of coal mining profit for the coal that is supplied to Mundra or is used in Mundra, and also on the lenders rebate and all that are still being worked out with both the state governments. We are in the final stages. Once it's finalized, we will know the exact numbers.
Sure. Also, I wanted to understand, you just spoke about that you're confident enough to scale up the capacities to the mentioned levels. But, since the solar pipeline has grown to around 2 gigawatts in the last 2 years, which is almost half of its targeted 2 gigawatts per annum number, can we assume that there could be some delays coming in the capacity expansion plans if the funds are not met on time? Any kind of challenges that you see that can throw off these projections for the near-term future?
2-3 things that has happened in last few months, which is giving us the confidence that we'll be able to do it. One is that earlier also we were not bidding for many projects because we had a challenge of investment. We didn't have money for bidding for many projects, and we were very careful that we were bidding only for few projects, and our success rate was very good. Our strike rate was nearly 20 to 22%. But in last few months, what has happened is Government of India itself has come with a very aggressive plan that in next 9 years, nearly 350 gigawatt capacity addition has to be done by 2030. Similarly, the RPO obligations, the new one which is expected to come, is targeting that all states will have to have minimum 30 to 35% of their energy requirement through renewable sources, and the enforcement of that will take place. The third is that the bundling of power with existing coal and hydro is being allowed. And lastly, I would say the retail requirement of power is going up hugely. I find that large number of industries and commercial establishments, because of their sustainability campaign and their long-term plans to become net zero, are moving towards the clean energy, and we are getting huge amount of requirements to cater to that, either through the group captive route or through the open access route or through the RESCO route. So I think we are very confident that the numbers that we have mentioned, we'll be able to meet those numbers and possibly exceed them also, considering the type of requirement that is coming up with India.
That's a very aggressive and a sharp strategy, I'd say. But I'd like to touch base upon what sort of valuation you think Tata Power standalone business can command now in light of ESG concerns, because majority part of the business is still driven by the traditional thermal power business. Most of the foreign funds are usually a little cautious with the companies when it comes to the ESG concerns. What is the company doing, in terms of its bid and the efforts to ease those issues or become more environmentally friendly for that?
So I think Tata Power was the first company more than 2 years back which said that we will become net zero by 2050. We've subsequently improved on that, and we have said we will become net zero by 2045. In addition to that, we are not just waiting till 2045. We will become net liquid and water discharge company by 2030. We've taken a lot of steps on other aspects, both on solid waste management and air pollution, putting FGD in all our plants. So I think we have taken huge number of initiatives in terms of our sustainability drive. We also are now not adding any capacity in coal-based. We took a conscious decision, and all our new capacity additions are moving towards business. So I think looking forward, you will find that Tata Power is going to become very, very environment sustainable and environment friendly company. And we are very committed to meet our obligations in terms of our positioning as a truly environment sustainable company.
Mr. Sinha, when you said that you're going to be adding in more capacity, more towards the renewable part of the business with this, does that also mean that you're now looking at inorganic route of expansion as well, given the kind of expansion targets we have in mind?
Absolutely. We will look at it more aggressively. We used to look at it, but our requirements are very stiff, both in terms of the quality of the equipments, quality of the assets which are there, and also what type of PPA and offtake arrangements they have. So not many of them qualify for those requirements, but we are always open to look at good assets and good opportunities, and if anything like that comes.
Any percent that you have in mind, that this is the percent that will come from organic route and this is the percent that will happen from inorganic ways? Because that would kind of set the stage of intense competition going forward in the sector.
Right now, we are looking everything to be done internally. We are not looking for inorganic. But and that's where I mentioned that since we do many of the things ourselves, our understanding of this business is very good, and not many people qualify or their assets qualify for even examining them and giving them an offer for taking over.
All right, Mr. Sinha, we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint. Indeed, a sharp deal cut out for the renewable power business, and all the best for your future.
Thank you, Nikhil, very much.